Please switch off your volumes. Okay, we start today's market talk. Investing is both brutally challenging and intellectually rewarding. What I mean to say is we must have ability to stomach volatility, and it only pays off when you are right about the underlying value and market has also temporarily overreacted. That means your analysis of the stock should be right. And even if it is volatile, you can hold the stock because your analysis is correct and market is overreacting. But 100% nobody is sure. So we should be able to acknowledge that we don't know of all aspects of everything. There are certain things which are unknown, out of our control. You can't control actions of all market participants. Hence, to be able to deal with the unknown, we must diversify our investments, keep a margin of safety, and be with liquid stocks only. Because then you can take an exit whenever you want. Otherwise, you don't get an exit. Hence, it investing is brutally challenging. It you can get whipped out and intellectually also rewarding in case your analysis is correct. So we must understand this. I have seen examples where stock is at 250 rupees, people buy it in bulk, and then it goes down 2 rupees, just 2 rupees. Just it can happen anytime, right? And people panic. Hence, be very clear about what you are buying and at what price are you buying. Now, what do these GDP numbers tell us? We'll discuss that. India's Q4 GDP growth has been resilient despite all the problems in the world. The GDP growth came at 7.4%, and for FY25, for the full year, it came at 6.5%. Considering all the external and internal uncertainties, growth was better than expected. No doubt about that. Now, we'll just see this. See, this is the GDP components year-on-year growth. So if you see here, the exports were up 3.9% and imports were down 12.7%. This was basic, and that led to the one of the reason for the uptick. The reason was that we did a lot of selling before the Trump tariffs came into play in March, and also the our imports had lower value due to fall in prices of commodities, especially crude, etc., and other metals helped. So the contribution of external sector was good in Q4, but it may be much lower in future because of the uncertainties with respect to trade. Now, contribution of gross fixed capital formation growth to GDP growth in Q4 has been 42%. The total contribution to GDP growth of gross fixed capital formation is 42%. Now, this has, if you see here, gross fixed capital formation, investments has moved to around 9.4%, right? Now, this is basically increase in capex on account of central and state governments stepping up spending after a pause on account of elections. Now, we must understand if the capex by state and central governments is the one which is driving the GDP, this is the place where you should be focused on while investing. Rest of the sectors are slightly muted. Sorry. Now, GDP numbers are yesterday's news. So what happens from here? Because tariffs impact will lead to lower contribution of external sector. So what will happen? Income tax cuts and lower inflation should support consumption. That's what I was talking about, discretionary consumption. Commodity prices are likely to stay low because there is not much of growth expected all over the world. And Monetary Policy Committee is likely to continue to cut rates. So these three are given. So you may see around 50 to 75 basis point rate cuts this year, enabling 6.5% GDP growth in FY26. So that is what RBI is also saying, and IMF is also saying that you will get around 6.5% growth. Real GDP growth, nominal would be around 10%. So corporates would grow 12 to 13. So that should be your base case for FY26. Now, what are the good parts for us is that macroeconomic stability, fiscal policy focused on quality of expenditure and prudence. You see, why am I saying this? Because if you see this year's budget, the focus was to reduce fiscal deficit. Government is trying to reduce borrowing. Hence, the bond yields are coming down in India, while rest of the world there is a lot of uncertainty. So, the fiscal policy is focused on quality of expenditure and prudence. Inflation is benign, and lower interest rates and corporate sectors with strong balance sheet should enable 6.5% growth to be achieved in FY26 as well. So let's see the GDP components. Imports, as I told you, were lower. Exports were higher. Now, investment, that is the gross fixed capital formation, came at around 9.4%. So that helped because most of the investments or the spending of the government was towards the later part of the year. Private consumption just grew 6%, which is bad because that shows that people are not really buying stuff. For government expenditure, other expenditures, this part last quarter is generally weak, so it just declined. Coming to sector-wise, agriculture was good. It grew 5.4%. That led to a spike in the GDP. Mining was not very good. Manufacturing again muted 4.8. Electricity again muted 5.4. But construction, this is why it went up 10.8. So that shows that where the state and central governments have been spending money on construction. So that is what I'm saying. You should be focused on these sectors, trades and transport and services. Services did well. Financial services and personal services both grew 7.8 and 8.7%. So services, that is which IT, banks, etc., are showing decent growth. Now coming to FI and DI data. So the point to note here is on 30th May, FIs have added shorts, roughly 5,700 shorts. So the net short positions have increased to 83,684 net short positions. So this should be a red flag. And where are they making short positions? Towards Nifty. Added 6,000 shorts on Nifty only. So Nifty is the one where there is a problem now. While Bank Nifty was mildly bearish. So this is what I was talking about. There is momentum, while Midcaps and Fin Nifty was okay. On stocks in cash side, they sold roughly 6,450 crores. And DIs, if you see here, they bought stocks worth 9,000 crore on 30th May. And in index futures, the clients are the ones who are more positive, while FIs are negative. Coming to the month-wise data for the month of May. So if you see here, around 9th May, we had 7,000 short positions and it went up to 13,000 odd. And now gradually the short positions have increased for FIs and it has gone up to 83,000. So they are around 30-70 is the short-long ratio, but the point, long-short ratio, but the point is that it can go up higher. Right now, the index has not come down really, but it can fall down anytime in case they start adding more short positions and start selling in cash. So it is now, right now, spread buying and selling is spread, while DIs have been constantly buying, but FIs have started getting into, so the day they sell big, is they sell big numbers, 10,000, 5,000 crore, 6,000 crore, etc. So one has to be slightly careful. Now coming to US, so if you see there is a lot of uncertainty in the US. Like we'll see last Monday what happened. After threatening European Union with 50% tariffs, Trump postponed those to 9 July. So what happened? US markets, it had a holiday on Monday, went up on Tuesday. Gold came down, crude went up because expectations were that there would be still growth in the world. Then gold went up again, higher on Ukraine-Russia tensions. Then what happened on Wednesday was that US Trade Court dealt a blow to tariffs by saying that they are not legal. Then the US Appeals Court, by the time the markets were happy, reinstated them again. So now these tariffs up and down will keep complicating the trade talks because you don't know how much to give in to the US. Like today, if India is having trade talks and they feel that tariffs are going to stay, so they will be a little bit more careful now, because in case they are why given to on US on tariffs if the tariffs are supposed to be illegal or can be brought down by the courts. Then on the final trading session of the month saw a mixed finish after Trump accused China of violating tariff agreement, and April core consumption expenditure came in line though. So inflation was not much in the US as was expected, but people are saying that it will come out later. And Nvidia quarterly results were stronger than expected, and guidance was good. So now what has happened is the bond yields have been moving between 4.5 and 4.4. So direction is not clear, but till the time it is above 20 EMA, there is no problem. Also, one of the bond auctions went through properly, so the bond yields came down. The fear was that there is not much of demand for bonds, etc. So that is not a problem right now. Now, dollar index again, it went up above 100 and has come down. So it is in a kind of a, they can't decide as to which direction it is going to take. Brent crude, again, it came down around 3% after there is a talk like there is not, there are going to be some kind of a deal with Iran. Russia, Ukraine things are moving in, I don't know which direction. And the major reason was that the OPEC is likely to increase their production, etc. So that brought the oil prices down. Gold went up and has come down on the premise that there is going to be a trade deal. Now, what happens next week is not known in case the US-China tensions again go up. Again, copper subdued, no movement, minus 0.29%. Bitcoin, again volatile, was down around 4.89%. It also moves on uncertainty. So if the uncertainty goes up, it goes up. If uncertainty reduces, it comes down. So nobody knows actually what direction right now it is taking. So S&P 500 was up 1.88%. Now, I was reading an article today that the correlation of Nifty to S&P 500 is roughly 96%. So if S&P 500 goes up, Nifty also generally goes up. Nifty. So not the Nifty 500, but Nifty 50. And hence, this is also right now in an undecided area, and it is not going anywhere. Nasdaq, good Nvidia results, was up around 2% above this rising trend line. So till that, it is positive. Again, Dow Jones above the 20 EMA. So it had a positive session. Again, there is some contribution to all these sectors, that is tech, etc., into this. So that helped. Now coming to India. Now what happened with India VIX is it had gone up in May, and then it has been steadily declining. Then it went up around the expiry, and then it has come down. So if it comes down, then this volatility which is there during intraday, etc., will come down. So we'll have to see this. It is still at a high level at 60 knots, so which is leading to high premium. So right now it is good for option sellers, not for option buyers. Now coming to Nifty, see what has happened is the retracement. It has crossed the 61% retracement, and that is providing a good support. That is roughly 24,550 area. That is providing good support, but it is not able to get through that. And if you see this, these are undecided kind of candles, all within this big green candle. So right now the direction is not known. It can go here, it can go down. Right now this is not giving any clear-cut direction as such, but above 61% retracement, it is positive. On the daily chart, as I see it, till the time it doesn't trades above this high which it had made, that is 25,116 odd, it will remain subdued. So right now what is happening is Nifty is moving between 20 EMA and 2550 or 25,100 zone. It is having a gradual decline, but it is not breaking this, so that should be some support. Hence, the way to trade it is that closer to this 20 EMA, one should go long, and nearer this 25,000 level, you should book your profits and then go short. So you can trade this range. The fresh long positions will come if it breaks this. If you see the hourly charts, again, see this is looking bad because this is like a now declining lower highs at least, and this lower level is supported at these levels. So it is not breaking this, and it is at these lower levels right now. So if you see, 26th was the starting of the week, gap up because of delay in tariffs on EU, but then markets have adjusted and have not really moved after that and have sold off kind of thing. So we'll have to see what happens. And hourly charts, it is below 20 EMA, so that is a negative. Now coming to Nifty Bank, which is looking good, good powerful green candle, moving up. So it is waiting to cross this 56,000. Once this 56,000 is taken out, and if you see here, the RSI is also moving up. It's on a uptrend. Similarly, all the moving averages. Once it takes out this 56,000, then you may see much higher levels. So let's see what levels. So if you see here, Nifty Bank, it has been consolidating here for last around say 27 odd days, and it has not gone anywhere. It hit a high here on 23rd April, and then 27 sessions it is moderating or consolidating, set to move higher because this is now becoming a kind of a flag pattern. So the generally in a flag pattern, what happens is the length of up move is the length of the pole. So this length of the pole is roughly around 6,000 points. So from here, in case it breaks out, you can see at least 60,000 over a period of time. And this should drive the Nifty also higher now because the momentum is coming in Nifty Bank, not in anything else. And RSI has also moved above 60. So this is a time to go long here. On every dip, go long, positionally long on Nifty Bank, and you will make decent money here. Now the sector which is not looking good to me as per charts is Nifty India Defense. This is a daily chart. So if you see here, this is a evening star right on the top. So after this, you'll have to watch this. So after the up move, there was a kind of a doji here, and now it can come down. So this one has to be slightly careful here with the defense stocks. Now the up move in Nifty Bank should basically come with HDFC Bank. It is taken again the similar level, support at 20 EMA. So if it crosses this 1975, 1980 level, it will eventually cross 2000 and then will not stop here. It will go to 2100, 2200 odd levels. So because then it will go into that momentum and blue sky territory. So, and it has consolidated here. So let's see which level it goes to. And I think along with this, ICICI Bank has also got similar charts. So they should both move simultaneously. Reliance, again, it has moved up. Again, it is consolidating. It is consolidating along the 20 EMA like the Nifty. So if you see here, it is again stuck in that 1400 odd range. So if 1400 is held, then it is good. If it breaks, then it will test the lower level. So we'll have to see this. There is no trigger which is coming right now. So the only trigger should be liquidity in case they have to move up because the earning season is over now. Now Nifty Midcap Select, it is now reached that declining trend line. So if it goes above this, then it should break out, right? Otherwise, it'll face resistance here and then may test the lower moving averages around 12,000 odd. Small caps are looking good. They were up 1.36% because this is where the liquidity is moving. So wherever there are good results in among small caps, just say invest it. You will make decent returns in next 2-3 months because the momentum of performance of one quarter generally continues for 2-3 quarters. So I'll cover 2 stocks today. First is Ganesha Ecosphere. It has emerged as one of the leading rPET. rPET is recycled polyethylene terephthalate fiber manufacturers in India. They recycle discarded PET bottles into user-friendly polyester staple fiber and polyester spun yarn. Now, what happened this quarter was that EBITDA margin missed estimates having been impacted by raw material inflation due to increased use case of scrap PET, higher export of washed PET flags, I'll show you the cycle, and muted textile demand. So now there is a lot of demand for used PET. Hence, the price has gone up, so their margins have been impacted. They are doing a capex of 730 crore for 90 kilo metric ton. Uh, is expected to be operational in first half FY27 and make a meaningful contribution in FY28. Expect peak revenue of rupees 2600 to 2700 crore during FY28. That's what they are targeting. New capacity at Warangal is expected to be operationalized by December 25. It is expected to run at optimal capacity utilization by third quarter, fourth quarter FY26. The contribution from value-added products stood at 42% of total revenue. The company plans to improve the mix to 55 to 60% in favor of value-added products by FY27. Now, this is part of that sustainability group of stocks. So, just covering that. Now, what they do is they collect these PET bottles. They have various collection network through which they collect. Then they sort them out. They go take it to their recycling facility. Recycling facilities crush these bottles to flakes. So they make these rPET flakes. And then these rPET flakes are converted to pellets, resins, which are supplied to end user industries. So that is where the bottles, fibers, bags and containers, sheets and films, etc. are made. Now, this is what is happening is now there is an export of rPET which is taking place. So there is less, so the prices have gone up, and used PET bottles also are in much in demand. So there again, the raw material prices have gone up. Their good part is strong collection network, a lot of joint ventures and partnership, good distribution network, and ecosystem of waste collection, which they have created, because you have to collect the PET also, PET bottle also, to be able to recycle it. So what facilities they have? They have a plant in Kanpur where they make this rPET fiber and dyed texture yarn. Then Rudrapur, again UP, again they make rPET fiber. Bilaspur and Temra, rPET fiber and rPET spun yarn. Now they are adding facility and creating more capacity in Warangal, where they have created this facility. rPET granules, B2F chips, filament yarn, RPSF. RPSF is regulated polyester staple fiber, and PPSF, which is polyphenol polyester staple fiber. And in Nepal, they are doing this facility of washing flakes. So they are planning some greenfield expansion also in Odisha. So they are a growing business. Now, what is going to happen is all this capex they are going to do are going to be operational by FY26. So FY27, their results would be much better. So seeing their financial performance, you see the sales grew 12%, but declined Q on Q by 13%. Though for the full year it was up 30%. 30% sales growth. Margins declined, as I told you, because of higher cost of raw material, around 56 basis points, though it was up for full year. And adjusted net profit was up only 10% because margins have declined, though for the full year it was up 154%. So it's a growing business. They have been over the years increased their installed capacity for various items. So what is they are trying to increase now is bottle to bottle and RPSF, that is regulated polyester staple fiber, etc. Now they are trying to increase that over a period of time, increase the capex. So if you see here, the major capacity addition will come in FY27. So where that will go up substantially. So this is where the upstick in profits will come. So over a period of last few years, they have shown steady revenue growth. So they are reaching now 26% CAGR over the next 2-3 years, and then after that it will go up higher because the base is higher. Increase in production over the years, again they have increased their production. So RPSF is their main product, which is expected to do well, and they are doing this PPP, HDFC, bottle to bottle, etc. So that is good, and EBITDA margins to improve on back of superior product mix. So it is expected to go up. So let's see. Right now it is stuck here, but subsequently, as the operating leverage will play out, it should go up. Now, what they are doing is they are doing a capex of 725 crores, expansion of rPET granule capacity. So they are doing a greenfield expansion in Odisha with 600 crores, 67,500 MTPA plant they are constructing, and doing a brownfield expansion in Warangal, 22,500 MTPA. rPET granules capacity to be added by Q4 FY26. So FY27 onwards, the performance will increase slightly more. Rapid expansion of capacities in recent year, especially into value-added segment of rPET granules. So if you see here, they are adding this facility of rPET granules, which has got higher margins over the last few years. So fiber has not got that kind of, that is constant, but these other facilities are improving. Now, what is projected is FY26, they should do around 1692. As I told you, they are saying FY28, they should be able to do around 2700 or 2800 crores. So let's see. That is what the guidance is. And they have done a EPS of around, they are expected to do a EPS of around 46 or and then 65 in FY27. So we'll have to see that, taking a mean around 50, 55. 30 times it is reasonable to trade at around 1500, 1600. They are saying they would grow revenue around 15 and 20% over the next few years. PAT will grow much higher because the margins are expected to improve as per them. ROE, ROCE, etc. are expected to improve. Net debt is going to go up, but which will subsequently go down. So FY26, as the debt is going up, the interest expenses are going to go up also. So that will impact the profits. EBITDA margins are expected to be slightly low in FY26, but go up in FY27 onwards once the scale comes up. Now, this stock, it had gone up to around 2400 in November, December last year. After that, it declined. As now, it was expected that it will not do really well, etc., in these quarters, etc. So it is now at a very critical level, in my opinion, at 1500 odd. It is fully 30 times for next 1 or 2 years. Everything is in the price. So every dip is a buying opportunity for a long-term investor, because this is a stock which will do well over a period of time once, because the government measures are also supporting this. Right now, there is a temporary problem. Now, coming to the next stock, Triveni Engineering. Firstly, I will tell you what is the business of Triveni Engineering is. It has got 4 verticals. First is sugar. So they have sugar plants in UP, India. There are a lot of these hectare area, 2 lakh hectare plus area under sugarcane. Some farmer associates, etc., are there with them, and they make all kind of sugar, etc., for various purposes. So they have their own six power generation plants with 104.5 megawatt grid capacity for their internal use. Then they make this alcohol, ethanol also, state-of-the-art alcohol producing facility with capacity of 860 kiloliter per KLPD. Flexibility of feedstock and product mix. Product include bioethanol, extra neutral alcohol, rectified spirit, value addition through Indian-made Indian liquor, and recent foray into Indian-made foreign liquor. Now they have a power transmission segment, which is a smaller part. 3 business segments: gears, defense, and build to print. So they make these high-speed gearboxes for various installations globally. So turbo gears is the one which they are making. So as per them, it is world class, etc. They have a limited defense portfolio also: propulsion gearboxes and other critical gearboxes, critical turbo and motor driven pumps, gas turbine, generators for auxiliary power, financial fin stabilizers, propulsion system integration, and propulsion shafting. So this is basically related to naval issues where these gearboxes, etc., are used. Then they do their water solutions, leading solution provider for efficient water management for industrial, municipal, urban application. So this is the other part of the business. So now what happened is, if you see this quarter, all the sugar companies performed very well because Q3 was very bad. So the strong performance in the sugar and gas division boosted profitability, as EBIT in sugars and gas rose by 41 and 39% year on year, cushioning the sharp 44 and 16% year on year contraction in distillery water EBITs respectively. So their ethanol didn't do well, their water business did not do well, the sugar and gas did well. Now, management has guided significant 10 to 15% year-on-year increase in sugar production for FY26, underpinned by a early start in crushing season, improved agricultural practices, and operating leverage benefits from higher volumes. Now, sugar prices have been on a downward trend as global sugar is expected to be surplus. Now, this is one first problem. Now, what is going to happen is I think the production is going to be higher in Brazil this year. So what is going to happen is it will right now already the global sugar prices are low, and the government is not too keen to give higher sugar prices. So if the sugar prices are low and the government keeps increasing the MSP, so their margins reduce. So this is one problem with them. Now what happens is after considering domestic production and exports, government may allow diversion of about 3.5 million tons of sugar equivalent towards ethanol, which is possible because there are certain domestic requirement, then exports, I think 1 million ton, etc. And after that, they may divert some sugar equivalent towards ethanol is possible. The reason is if the B heavy molasses is given towards ethanol making, the quantity which is produced per ton is much higher than from C heavy molasses. Right now, the government is giving them only C heavy molasses. Now, what is C heavy molasses? Where the sugar content is less because a lot of sugar has been taken out of it. Now, distillery division margins compressed 1,1151 basis points to 2.7%. Adverse raw material mix because the sugar was given less, so they had to buy maize. Now maize prices were higher, hence to achieve those ethanol targets they had to buy higher priced maize, so which hit the profitability because earlier the FCI rice was used to be given them, which was cheaper, which was discontinued post July 2023. So profitability was adversely affected due to lower margins on maize-based ethanol and lower volumes from molasses. Because what the government did was they increased the prices for only the C grade molasses. So what happens is the C grade molasses produces lesser amount of ethanol. Now, management expressed disappointment on ethanol prices not being changed in FY24-25, except for those produced from C-heavy molasses. So, one side, ethanol prices are not going up, while for the prices for only the C-heavy molasses, which is not that efficient product for production point of view, was increased. Now, they have this power transmission business where their gears are manufactured. They have a healthy closing order book of 390 crore and a major capacity expansion is underway to increase capabilities by 75% to 700 odd crore by September 2026. Water segment has a closing order book of 1600 crore, including 1100 crore in long-term operation and maintenance contracts. Now, within defense segment, it is well placed to handle upcoming shipbuilding projects for the Indian Navy and Indian Coast Guard, given its presence in multiple product lines and partnerships. So now let's see their results, financial results. So see, this is in millions. So they did a growth of around 24% year on year in revenue. So it is roughly 1925 crore. EBITDA margins were just up, but from Q3. So if you see here, Q3 EBITDA margins were terrible. So it really went up because the operating expenses were very high in Q3. So the PAT has grown this quarter by year on year by 16%. But if you see for full year, the gross revenues have only been up 10%. Margins have declined because higher input costs and raw material costs, etc., and not getting higher prices for ethanol. And the PAT has also declined around 40% year on year. So that is the point. EPS has also declined similarly. So now what was the problem was that raw material costs were 57% of sales in third quarter, which led to lower margins. This quarter it was around 52%, so the margins improved, but still they are higher from Q4 FY24. Rest are normal requirement. So the net margins are right now at 10%, while they were just 3% in third quarter FY25. So that has impacted the full year's performance. So if you see full year wise, raw material costs have gone up, staff costs have also gone up slightly, uh, gross margins, etc., have come down. Operating margins and net profit margins, everything has come down. Now let's see their segmental financial issues. So if you see their total 1900 odd crores quarterly revenue. So out of this, around 1100 crores is sugar, and 450 crores is distillery. So these are the two main components. Their revenues were growth was good. Gas is just 139, but grew around 58%, and water and waste management also grew around 41%. So the net revenue grew 25%. The EBIT of sugar grew 40% plus, and gas grew around 39%. But there was a decline in the EBIT of distilleries and decline in the EBIT of waste and water management. So that's why the net EBIT only grew 21%. Now, if you see the segment-wise margins, sugar margins were up, but rest of the margins have declined. Hence, uh, there are a lot of problems if you are investing in sugar and distillery or ethanol business. So if you see even year on year, the sugar margins have declined, the distillery margins have declined big time. Gas margins have been declining. Only the water and waste management margins are higher year on year, and total EBIT margins have also declined roughly 400 basis points. So, what are they hoping for? Triveni Engineering expectations are higher sugar prices. Allocation to sugar export should be also good, because moment the sugar production goes down, the government immediately stops the sugar export. But right now, even exports will not help because international prices are not that high. Then higher ethanol volumes, better prices for that, lower maize prices, and improved availability of FCI rice at lower prices. This is what they are hoping for. But what has happened on ground? Firstly, ethanol prices have not changed in SS 24-25. That is spring and summer 24-25. Ethanol prices have not changed, other than C heavy molasses, which government wants to promote. Next, Brazil's sugar forecast is higher than previous season, and international sugar prices due to oversupply is seeing an average 20% decline during FY25. So, considering everything great, right, there is an SOTP valuation which one of the brokerages has given around 545, but I think this is too ambitious. Now, what is expected is uh, they are likely to do around 20% or growth in FY26 if everything works out, and would also do a PAT growth of which will should double. Actually, they are saying if everything perfectly works out for them, so the PAT should double, and ROE, ROC, etc. should double. So if you see here, FY25 EBITDA growth is negative, PAT growth is negative, uh, revenue growth is just 9-10%. Margins have declined and net margins. So there is a lot of volatility in the performance. So you have to be very careful these days. Debt has, because of the capex, etc., had come down, have gone up, but now it is expected to come down. So based on projections of better monsoon, better sugar prices, better prices for ethanol, and better growth in power and gear segment, etc., they are expecting a higher ROE and ROC with the good revenue growth and PAT growth. Because if there is a ROE becomes double, the PAT growth will also increase substantially. So they are expecting an EPS of around 23, 24 for FY26, which I am slightly skeptical about. We'll have to watch this stock. So you can see it is very volatile. Right now, it is at around 430 odd. So I just want, I'm no recommendation for this stock. After the results, it went up because of with good results. So it went up with good volumes, but has come down immediately because of so much of uncertainty which is related to this. what I have only covered is this, is that you should understand what is the factors which come into play in a sugar business, and how the ethanol business are the factors which come into play. So you must understand these issues. So hence it becomes a kind of a cyclical stock. So as an investor, it is better to avoid a cyclical stock. These are more for trading and for people which have got good knowledge about this sector. So because you have to buy these stocks when they are in the down cycle, not in the up cycle. So if you buy it at the top of the cycle, you will not make money. You have to buy it at the lower end of the cycle, where things are likely to improve from there. So that's it. I've covered. Thank you. We'll take questions.